Hello, everybody. Mike Arnold here, co-founder of Path Trading Partners along with Bob Iacino. Tesla gap down today. Again, no real big bounce off the automation, fully autonomous driving with a million robo-taxis by mid-2020. Most people discounting it as a bunch of hype. P.T. Barnum, Elon again out there. That won't be achieved. Well, it's interesting because, doing some fundamental research in California, you have to apply if you're doing autonomous driving testing as there's two levels, level 1, level 2. Level 1 is essentially like for every car manufacturer essentially has it. Level 2, only Waymo has it, which means you can actually test level 4 and 5 cars. Tesla recorded 0 miles officially in California last year. Through the autonomous testing program. Doesn't mean that people weren't using autopilot. It means that you have to apply for the licenses to officially test there, and for them to roll out full self-driving in the next year and a half, when they've recorded 0 miles in California, and California is their biggest market, is very doubtful. So a lot of institutions are also seem to be unwinding their positions if you follow what they're doing, and a lot of retail investors are jumping in, probably based off the headlines that they're watching. So be very careful. You can go to Robinhood and track. There's more and more just retail investors that are buying Tesla stock, but also institutions are unwinding core positions, and retail investors are the weaker hands. So just keep that in mind. Now we're still holding at this critical level. We came down, dipping below the trend line, our key trend line, and then rallying, filling the gap intraday. Right now, still key resistance coming in. We're just going to call it 270.50 to 271. On the upside, maybe 272. That's your key resistance. If we did get through there, then we'd be watching for 279. To the downside, the key levels, you see the low from the 25th of March and the low from the 23rd. That's in the area of the key levels, along with this 254.57. So if we get below 254.57, really watch out. We have earnings after the market close on the 24th, which is tomorrow. Their earnings for Q1. Now they're probably going to try to recognize more self-driving revenue because they haven't technically delivered the product yet. Now I don't know how they're going to deal with it with this new computer, if they're going to try to recognize more of that self-driving, because people have paid for it, but it's still been in beta. So we'll have to see if they do something with that with the numbers, but the numbers probably aren't going to look good for Q1, and they have not got a really decent bounce off of this self-autonomous driving show that they had yesterday. So we could potentially, we'll have to see what happens tomorrow. I'm thinking there's not going to be a huge range day tomorrow. Be very muted because of the earnings after market close, and then we'll have to wait for the gap. I'd be surprised if we got a gap up. I really would, unless they really do some fancy accounting and do something with the numbers that shock everybody. I'd be more betting on a gap down, a flat to a gap down. Now, a gap below 254, we'd be watching for about 245. That's right in between these two numbers. And below that, 238. But keep in mind, if we do go down there, there's going to be a fair amount of stops down there because all these dips that were bought, you see here, especially if you get down around this 238, that's below this dip, this dip, this dip, this dip. So if we do have a big gap down for the open on Thursday, you'll start to be able to see it tomorrow after hours, and we should be able to post a video for you with some after hours price action. Now remember, they release the report and then they have a conference call, which will then they try to put a bow on the numbers. So That's what we're looking at. By the way, on the weekly basis, the rotation zone and the flat 200. The flat 200 has been an area of support, and the declining rotation zone is now at 274. So that is very, very major resistance on a weekly basis. If we were to have any rally or gap up, that would be an area I'd be watching for. Although I'm more watching for a gap down, especially below some of these key recent lows if the report is bad.